Welcome, everyone. Welcome to another edition to my weekly Friday market update. Every Friday at 12 o'clock Pacific time, I stream and go over all of the relevant headline articles that I want to cover and provide my insights to. And then at the later parts of the video, I always go over and extract the market data itself from the Bay Area so that you're able to see the numbers and see how things are likely to change over time. Before we begin, I do this because I want everybody to be aware of what is actually happening. And my thoughts are from someone that does this day in and day out of how this may or may not impact the Bay Area real estate market. If you're a renter or if you're thinking of doing a trade up, a lot of people are moving further away from the core, more expensive areas. Let's have a conversation. I've had a lot of these conversations already through these videos itself. So I'm glad it has been helpful. And looking forward to a separate conversation with yourself. Without further ado, let's get going. The very first and the largest thing here is about the upcoming HEALS Act. So this is still ongoing. It hasn't been resolved just yet, but there's going to be likely another stimulus package that will continue to extend what we already have. Since they're going back and forth with the Senate and the House, I know they're planning to at least temporarily extend until they figure out the details of what a further stimulus would be. So I believe that $600 a week extra stimulus check will continue to be going on for at least another week. Or another couple of weeks as they get things taken care of. However, it is likely that there's going to be another extension of at least some sort of stimulus. And this one is a little bit different than before. So people may get a little bit less stimulus checks than the $600 a week, which was actually a lot higher if you think about it for most people. If you think about what minimum wage is, that is about, let's see, this would be equate to about $12 an hour. So for many people, this was actually more money for them to sit around and just do nothing but collect checks than it was for them to get out and start working. So the Republican side felt like this was not encouraging people to get back into the work environment, and people were just taking advantage of this. So they're thinking of lowering this. There's discussions. It could be $200 a week to really give them the motivation to get back to work. So this is still ongoing as we speak. The Democratic side would want to increase this, at least keep it at the current level of $600 rate. So it'll be interesting to see what happens. But at the very least, as they figure things out, they will extend this for another couple of weeks of the current extension for those that are unemployed. So something to be aware of, but be prepared. Another $1 trillion is going to be in place with the next act, HEALS Act in this case. Now, one of the other big news of the week was the big tech hearings. So big tech had they were grilled at the Senate level this week, I believe just yesterday. And they all had the opportunity to share. And it was kind of interesting because they all shared the same rags to riches story and how on one end, they don't share how dominant they are in their respective industries, but they say on a macro level, it's a highly competitive environment. They all had the same story and the same speech. So it's kind of funny and interesting to hear that. Now, there are a couple different outcomes from this, and I personally don't think all of them are bad. So let's say nothing happens and they keep progressing as they are. They, at the latest earnings report, have absolutely smashed and killed it from a revenue beat perspective, but also from an earnings beat perspective. Most of their reports just came out yesterday, and they all have record highs when it comes to stock, but also from earnings and from a revenue perspective. So they're doing very well. And as I mentioned, especially here in the Bay Area, we're not living in equal levels here. The ones that are doing very well, like big tech, are doing even better now. And the others, like Main Street of the service industry, it's just not the same. And so it's very important for people to understand there is a very big divide when it comes to the haves and the have-nots. And big tech is certainly dominating when it comes to the current environment. If you think about what we do today, I mean, we're using these platforms more than ever before, whether people are browsing on Facebook, Instagram, whether it's TikTok, whether it's YouTube for content, Netflix, Microsoft from an enterprise perspective. People are more attached. And I honestly can't imagine what if we didn't even have these tools. So they all have a very high satisfaction rate from a consumer perspective, given what the kind of entertainment and the content that we're able to get. However, from a Senate perspective, it's very easy for them to target them and bash on them as to they don't allow more innovation and just stifle competition. However, even if there was a breakup, I feel like that would actually be a very positive thing for not necessarily for consumers. It may be beneficial for consumers as well, maybe not, but I would say it would be beneficial from the job market perspective. If you think about these large entities, they have various different businesses. So if you think about Facebook as an example, Facebook is purely on ads, but they have very big businesses and a lot of other products, whether it's Facebook, the platform itself, but also Instagram. So if they actually broke it up, they would hire a lot more people because there's a lot of things that overlap, whether it's from their sales team on the ads side, or it could be on the G&A side. So it could be whether it's recruiting, it could be on just accounting and all these kind of the basic kind of back end things, or it could be support. So there will be a lot more hiring that will happen. I think the profit may shrink a little bit. However, from a stock valuation perspective, think about the value that's increased if you're able to buy just Instagram because of their trajectory of their growth, or buying Facebook as a standalone asset. An example they can look at is like eBay and PayPal. So they were merged at one time many years ago, but as they have separated, they had their own growth trajectories. And I think eBay recently just even sold for billions of dollars their classified ad side of it, which I don't even know many people that even use that. But as you can see, if they actually broke it up, it may actually provide a larger net market share value because they're all in different pieces and they all have their different growth trajectories. And there's also a certain level of growth trajectory and a PE valuation that you can have from a smaller, faster growing company. So honestly, if they were able to break it up, and a lot of these are able to break it up, I think the total aggregate of the total market cap would actually be a lot higher. So I actually don't think it's a negative if they actually do break it up by any means. And it'll be the same for anything. You look at Amazon. Amazon has a huge e-commerce business. Of course, everybody knows that. But if you look at their cloud business of AWS, that's already at $10 billion a year of or a quarter of revenue. And so that's about an eighth. So that's about 12-13% of Amazon. But that has a really crazy trajectory, but also potentially the gross margins versus the e-commerce business. So I think a lot of potential can be unlocked if they were to do that. So I'm not too bearish if it does happen. And so does Josh Brown at CNBC, says the same thing related to if it breaks up, it's actually not the end of the world. It's actually still, it could be better, honestly. As I brought up, big tech posts blowout quarters, just absolutely smashed earnings. Facebook, Google, Amazon, Apple. Surprised actually Apple as well. People still wanted to trade up and use new tools and buy their platforms versus the others are more of internet-based services. So something to be aware of, like people may have thought, a few people have left Facebook's advertising platform and Facebook is going, downwards. The interesting statistics is while those are big and huge headline articles, Facebook actually has a really large amount of their revenue actually comes from small to medium-sized businesses. It's way larger than these very large players, which a lot of people don't actually really understood that. And while the small and medium-sized businesses have been hit, they're very reliant on the Facebook and Instagram platforms for their own marketing perspective. So something to be aware of, like even though there's been so much negative press of Facebook recently, it's still a big population. And really, if you're a small and medium-sized business, you absolutely rely on Facebook a lot to grow your business. So, and it's just the latest earnings report shows that they absolutely killed it, smashed it on the revenue side and the earnings side, way better than the expectation. And so hence their stock price after hours did incredibly well yesterday. So let's talk about the loan and real estate market side and how that is being impacted. You can see in this case, loans and forbearance fall for the 6th straight week. I brought this up months ago that we couldn't even get out of forbearance if we wanted to. People use this as an insurance. And the reality is this, people want to drag it out as long as they possibly can. And then if they need to, then they'll sell it. So, and fortunately for a lot of people, over 90% have significant equity of at least over 10% in their homes. So they still will not be underwater. So the aspect of people asking me, hey, look, where are foreclosures coming? What's going on with foreclosures? I don't see that happening for a while, if it does happen at all, given the equity amount, but also given the support that is given by the government. So something to be aware of. We should see this continue to drop, even as, people have already seen COVID cases have continued to increase in most areas, but the aspect that is still dropping shows a different story. Mortgage applications in terms of buyer demand continue to be extremely strong. We still have a lot of people actively looking, and I'll show you the actual home ownership rate are at decade highs. But this gives you an idea. The thing that's happening right now is not people leaving for good per se, is people looking at that math equation. Why am I paying such a high amount in rent when I can literally own a home and gain all the benefits from that? So we're going to continue to see purchase mortgage applications remain steady, if not continue to even increase, which is a crazy amount if you think about where we're at right now and how high demand levels are. But as we continue to see rates could either stay flat, which is what it is at right now, or continue to drop, which is likely to happen, we'll see a lot more and continued movement of the demand side continue to increase, but also would force a lot of pressure on prices given the amount of demand versus supply. Pending home sales surge for a 2nd straight month. Signed contracts gained 17% in June as low mortgage rates spurred home buyers. As I mentioned previously, just the Fed has continued to express they are going to keep rates at near zero until the economy recovers. So they are pumping, and they are very firm as they have ever been in terms of what they're trying to do to create the confidence for consumers. And clearly, consumers are very confident in the current environment and the current market, given how low rates are. If you factor in inflation, we're basically borrowing at close to nothing. So it's a really incredible time to see this stat. There's one stat that I saw here too. So 2nd consecutive month of double-digit gains makes sense, especially given the low base point, right, when March, April happened. So I'm not too surprised with that. However, there was a stat here. I'm trying to find, I thought I saw it. Even from a year-over-year perspective, it is still higher than it was the same time last year. So we're not in a level of just low inventory per se, of like not a lot of people listing the homes. We're actually just at really high demand levels. That's the biggest difference this time around versus last year. Just a lot of people are actively looking and searching as we speak. So one thing that I brought up many times is we're having a lot of people buy homes that are originally renters. And this goes a lot to my case of why the market continues to increase. Millennials are growing up, so they want to settle down. So that's a huge subset of the population. That's about 80 million people altogether. And the millennial age range goes up to the age of 38, which is actually the age of when most people are actually starting or at least considering to buy their very first house. So there is that aspect. As you can see, we are at about 68%, which is a 12-year high. So this has a lot to do with also the aspect of low interest rates, right? People that are renting, that are typically in this category, are also the ones that have decided, why am I renting when I just buy a house? And because they have more flexibility of where they choose to live, they have more of an option to live a little bit further away, which are also cheaper. So there is that aspect of those two things that are really helping drive up the demand aspect of people getting into homes. And you're going to actually see, you might be shocked, where are the areas that are growing the fastest in terms of appreciation? So you may be shocked at which county it is once I show over the data momentarily. However, let's go take a look. So as I mentioned, I always extract the data so that you can visually see for yourself what is actually happening from a market perspective. This is all tracked. I actually track it every single week. So you'll see any sort of trends. You'll see any sort of flows with the prices, but also what I really am interested in seeing, because this is more of a leading indicator, which is how many new listings are coming on a week, but also how is the ratio of contingent pending versus the number of new listings. So as you look at this, this is for San Mateo County. You'll see that there's 162 new listings, which is about what it has been for all of July. It's about what it has been pre-shelter as well. So it's nothing high, nothing low. It's just pretty good levels. The main difference, though, is the number of contingent and pending. You can see 181 versus 162. So we have more that is getting in contract and getting removed from the market than we are even hitting new listings. And as you can see, you may have hoped or expected some sort of slowdown over the weeks, but now at this week, we have seen really, really high numbers, higher than it's been for a long time. So it's certainly not slowing down. It's certainly very competitive. Now, what does that mean from a price perspective? Single family residential in San Mateo County is at an average about $2.3 million. I post what it was last week so you can see how it has been trending. Fortunately, actually, for a lot of people, it has dropped a little bit. So we're not actually at all-time records, which it was in May, but we're pretty close to it. So you're not going to be expecting very much discounts by any means. We're just a little bit slower, a little bit lower than May, but we're still at the second highest of the last year for sure. And actually, for many, we're actually at the same amount of what it was, which was the height of 2018. Now, condos, townhomes, not as attractive, right? Number one, there's not as many of them. So there's only 1161 out of the last 12 months. So it's only about 100 a month. But you're going to see a little bit more flexibility, a little bit more options if you're buying a condo or townhome. So if you wanted a condo and townhome in San Mateo County, it's certainly a lot easier to get and there's a lot less competition. Residential-wise, it's still very competitive as we speak, as you can see from this chart. Now, next one is Santa Clara County. Santa Clara County has been one of the hottest markets since the shelter-in-place took place, given you get a lot more land. The weather is pretty nice out there. At the same time, there's a lot to do. And so you can see the new listings have actually been less than it was in the previous weeks, 343. So it is less than before. And you can also see the number that's contingent and pending at 396. So Santa Clara County has been very competitive because you can see over the weeks, the last 5 weeks, that really the contingent and pending numbers are generally higher than new listings. So we have this inventory squeeze, and you can see from the prices as well, right? July record month, record amount for single family homes, all-time highs. These levels are higher than it was in 2018, which around March timeframe was the record high. So we're hitting all-time records in Santa Clara County. I don't suspect this is going to be slowing down from what I've seen with the offers that I make and how they go pending. It's still very competitive there. Now, condos, townhomes as an asset class, very different, right? We're about roughly the same, if not flat, for the most parts, all throughout the year. And there is a lot more condos and townhomes for Santa Clara County than there are in San Mateo County. We have over 3,000 over the last 12 months. So there is more inventory, more options for people to choose from. So something to be aware of, relatively flat, not much discounts. So it's actually really good for buyers that are looking at condos, townhomes, because if you think about it, a year ago, rates were significantly higher, at least 0.75 to 1 point higher. Usually when that's the case, you might see a price difference of about 10%. So the aspect that you're getting it at about the same amount is really beneficial for buyers. But you can see from a single family perspective, very hot, very popular asset class to be in. Now, let's take a look at Contra Costa County, right? Contra Costa County was one of the certainly very interesting market. I have a client, several clients that are looking out there, and I've seen the craziness and the intensity that's happening out there. I mean, we're seeing all cash buyers right now for whatever reason. You can see we are at record highs, right? Look at the increase of what has happened of June, July. Like now we've passed for the first time single family houses in Contra Costa County over $1 million. Single family house, right? Contra Costa County, this is the result. So it's been really intense, way higher than you see over the previous weeks. And this is not going to slow down. It's really intense out there. There is a lot of offers. There's a lot of bids. They're all breaking records. It's really intense out there. So it's pretty fascinating to see. Condos, townhomes, similar result as everything else. right? About the same as it was over the last several months for the entire year. Not too much there. So you can see residential single family absolutely on fire across the board. It's a very popular asset class for a lot of people. Alameda County, on the other hand, a little bit different story. It's about the same, right? I mean, we're still higher than it was a year before, but nothing too crazy. Yeah, nothing too crazy. Relatively flat versus the last several months. So that's just something important for people to note. Same with residential, townhomes, and condos, about the same. So nothing too crazy there. But this goes in line with all the other places in other parts of the Bay Area. And the last but certainly not least is San Francisco. So San Francisco finally wrapped up of July. So we're able to pull that amount. The stats I have is a little bit different, but it gives you an idea of where prices have been. I've actually changed this. So this is actually not medium anymore. This is average. I'm actually even going to change this as we speak. So this is the average price. I actually changed these metrics so it's actually more in line. I think the key for this, though, is as long as the metrics are the same as you go through the a long period, then you're going to see very similar trends. But the average price of a condo is actually higher than it was in past. You can see the number that has been sold is actually much higher too. So it has actually recovered quite a bit versus what it was before. You can see it was really slow over the last several months, but we've picked a pretty high level. Same with the number of single families that have sold in July, much, much higher, and already what it was same time last year. So while there's a lot of press of people not wanting to stay in San Francisco and leave the area, it's certainly not being reflected too much from a price perspective. You can see year over year, it's a little bit lower, but you can see a year over year is a little bit higher. You can see June is also higher. So you're not seeing any discounts for single family in San Francisco. You do see more inventory for condos, but you can see the prices are still either about the same as what it was year over year or even higher. So don't expect too many discounts per se when it comes to shopping, but you will have more options to choose from. So it's something very important to be realistic of the current market. You can choose to believe what you want to believe, but that's why I extract this information so people can make a decision for themselves about this data. Well, I hope this was helpful. Like I said, every week I go over the latest market updates. I go over any sort of relevant headline articles, especially here in the Bay Area, that could be of impact. But I also extract the information so that you can visually see it for yourself, and you can see that it's very much more of an analytical approach that I go by. If you or anyone you know is interested in buying or selling, let me know. Happy to be a resource and happy to answer any questions you may have. We can always set up a private call or a private video conferencing call so we can go over your situation and come up with a game plan for you, and also leverage these crazy record low interest rates. I hope this was helpful, and I hope you have a great weekend. I'll see you at the next one. Bye now. Thanks for making it to the very end of my YouTube video. If you like the content, please hit that subscribe button. Make sure you hit that little bell as well, since it'll give you notifications of when my next episode is. If you know of anyone that is considering to buy or sell a home here in the Bay Area, I'm never too busy to help more people. Always welcome to have a conversation, regardless if you're ready to go right now or if you wanted to buy 5 years later. Click on that calendar link, and then you'll be able to book an appointment with me and love to have a conversation about your situation. In the meantime, I also do have a monthly newsletter, so feel free to hit that link below, and then you'll be able to get my updates, personal updates that I write once a month in terms of what is going on with the market and some of my latest activities. Hope to see you at the next one. Thank you.